A quick look at the Asian markets. Remember, the Nikkei as well as the Kospi are the ones which are trading. The other Asian indices, all of them shut on account of the Lunar New Year. And we're getting some early rates from Straits as well, up around 0.4%. Not sure whether Singapore is on or not yet. However, the Nikkei is now still sitting with a cut of about 0.75%, and this despite SoftBank being higher by about 12%. The Korean index was earlier in the red and now has moved higher, and that's primarily on account of index heavyweight SK Hynix, which is high by about 2%. The SGX Nifty indicates a mild softness at the open, close around a 20-point cut is on the cards as indicated by the SGX Nifty. But Vodafone Idea will be one stock which will be on our radar on account of its third quarter numbers. It was a whopping 5,000 crore rupee loss as the company posted it on its bottom line. Rima is here with all the highlights. Rima.
Yes, absolutely. That 5,000 crore of a bottom line loss takes the focus. It does include 725 crore of a provision made for exit penalties. But that apart, I think that number is going to make the street a bit nervous. But if you strip that apart, operationally, actually, the company has managed to do better and positively surprise the street. So the margin performance has been better than what the street was anticipating on account of the integration synergies. If you read the press release, the company has said that we have seen a month-on-month improvement in the daily revenue in the month of December as well as in January, which is a positive. But again, the problem is the big loss as well as the high debt on the company's books, which stands at 1,147 billion rupees, which puts the debt to equity at close to about 25 times. They've also lost 35 million subscribers in the quarter. If you look at the numbers, they're not strictly comparable because the Vodafone Idea integration only took place on the 31st of August, which means in Q2, the September quarter, you had 3 months of Idea and only 1 month of Vodafone, which is why the numbers are not comparable. But if I compare it with the pro forma numbers, then you're working with a revenue decline of 2.5%, margins improving to 9.7%, which is better than street expectations of 8.4%. ARPU is improved to 89, but that is, of course, on account of subscribers being lost, as a result of which that base coming down. Fundraising plans are still intact for the company. So net-net, the operational performance has been better than what the street was expecting, but the street will grapple with that high loss of 5,000 crore rupees and the big debt on the company's books.
Okay, Rima, thank you so much for that. So numbers for Taro also flashing for you on the screen. So the operating income has increased by 17 million to come in at $78 million, and even the net profit has come in at around $93.5 million because of a forex gain as well. So those are the numbers coming in for Taro, and Sun Pharma will be in focus on account of that as well. But moving on, JSW Steel delivered a mixed Q3 numbers yesterday. The sales volume came below estimate, but the EBITDA per ton beat the expectations. Nigel D'Souza, our colleague, spoke to the management. Here are snippets of that conversation.
Domestic consumption growth is over 8%. If I see the January number, it is over 9%. So therefore, there is a strong growth in demand in India. Okay. In addition to that, if I look at the calendar year 2018 numbers released by WSA, World Steel Association, it is talking about India is the third largest consumer of steel in the world, and also it is the fastest growing consumer in the world. Okay. So this indicates that there is a strong demand for steel in India. Excepting some sentimental change which has happened starting from November because of the global situation, there is a lot of destocking which has happened in the last 2.5 months. Okay. That is the reason why there is appears to be a weak demand, but inherently it is not so. To some extent kept the prices of the steel at the same level as that of last quarter. Okay. That is one reason why you will find the EBITDA margins more or less remained at Q2 level. The point is whether the impact of lower prices which were there in November and December and also January to some extent will have an impact on the margins for Q4. Yes, there will be some impact. What is comforting to us is in the month of February, we have seen an uptick in prices globally, $40 per ton. Right. So we also increased the prices on 1st of February in domestic market. So whatever reduction in prices that have happened in November, December and January, to some extent I think prices will go up in my view, considering the global situation currently, where iron ore, coking coal, scrap, and all the inputs prices are going up, and steel prices in line with that increased by $40 per ton.
All right. So internationally it's gone up by $40 per ton. You're telling us that in February 1st you've increased prices. By how much, and has it been accepted already by the market?
Yes, because it is basically landed cost of imports. When the global prices went up by $40 per ton, automatically landed cost is going up to that extent.
So you give us a number?
So we have increased to the extent of 750 to 1,000 rupees per ton.
All right, so JSW Steel. From steel, let's shift focus to the pharmaceutical space then. Lupin reported a mixed quarter. The stock ended with 0.5% gains yesterday. The revenues and margins aided by licensing income of their new chemical entities, while the pharma major reported a loss of close to around 130 crores on account of a litigation in Europe. Let's hear out what the management had to say in the conference call that was held last evening.
Based on the trend that we have seen in Q3, where our baseline has gone up, plus the new product launches that we have in Q4, we expect to close the year on a very, very strong note.
Can you update us with regards to Goa? When did the inspection start? What kind of inspection is it? And what, in your sense, would be probably a timeline of resolution now?
So as you know, I can't talk about the Goa inspection. It's ongoing right now. But we can talk about it once it ends.
Okay, so that was about Lupin, but from the pharma space, Cipla also reported numbers which were below estimates, but the margins were largely maintained. Hear out what the management had to say on the conference call for that company as well.
U.S. business continued its strong trajectory, growing 18% year-on-year and 10% sequentially. For the recently concluded U.S. FDA, PAI and GMP inspection at Goa, we have received some observations which we deem procedural, which we will submit a response to the observations within the stipulated time. Our R&D pipeline is progressing as per plan. Our respiratory trial program is on track, and we are expecting to file 2 products next year and have 1 launch every year starting next year.